We had a great year. We broke 40,000 ounces for the first time ever, which was a huge, great achievement. And overall, we'll be an 80,000 ounce producer with around sort of an all-in sustaining cost of about $950 as opposed to $1050 today. So with today's gold prices and today's exchange rates, that's a pretty nice place to be for a company of our size. Whilst we're eager to start our underground operation at Coringa, it's something which we wouldn't be comfortable doing until we fully own the asset.
Hello and welcome to Crux Investor. We're going to be speaking to Mike Hodgson, CEO of Serabi Gold, in a minute. We've seen an article this morning about a convertible note and we wanted to know more. So good morning, Mike. How are you?
Very well, thank you, Matthew. Thank you very much.
So, press release out this morning, $12 million convertible note. Why have you done that?
Well, I think everyone will know, as Serabi investors and people who have been following us, that we've obviously got the Coringa project, which we have been advancing, making good permitting progress at the moment, and it's a very similar deposit to our Palito operation. So we see it as our obvious and quick organic growth. Working through the permitting process, and one thing that we do have is a license to start the underground operation, and that's something we're eager to do. One outstanding condition on that has been, of course, we have a final payment to make to the company we purchased the asset from, called Equinox. They were called Anfield in the past, but they've since become Equinox, and we owe them basically $12 million. And I think the stumbling block is, whilst we're eager to start our underground operation at Coringa, it's something which we wouldn't be comfortable doing until we fully own the asset. So the payment will be used to actually settle the final payment to Equinox, which is going to be happening, all being well, end of February.
Fantastic. Okay. And you also have a little bit of debt with Sprott outstanding. Are you going to be tackling that, or is that something you can roll on?
Well, the good thing about this $12 million convertible loan is it frees up us to use our own cash. We've been running up our cash flow quite nicely during 2019. We opened the year with $8 million and we ended the year with over 14. So we've been building up cash. The whole idea was trying the original intention was to actually build up that cash as much as possible to actually make the Equinox payment, but instead we'll use that cash to pay off Sprott and actually end that debt as well, which is sitting around sort of a little over $6.5 million. So we'll pay that out of cash flow. That's what this convertible loan allows us to do. It liberates our cash to do that and continue with our various work programs at Palito, including and Sao Chico, where we're drilling a lot to try to increase the resource, and of course to fund that underground development, which we're going to do at Coringa in the first. Probably from Q2 onwards in this coming year. Okay,
can we just, for benefit of people who are not quite as financially literate as yourself, explain what a convertible is? It's a debt instrument, but what are the terms that you have attached to this instrument?
Okay, well, a convertible loan is essentially money where a lender puts money into the company on the condition that over a term, and in this case 16 months, they have the right to then take shares at a pre-agreed price, the exercise price, which will be set as at the beginning of the loan. In other words, the next few days, they've got the right to actually acquire those shares at a fixed price at the end of the term. They may want to be converted, so in this case, it would be fairly close to the market price, but they could choose to actually get paid back in cash instead. So the term is based on the company being able to demonstrate that they can actually pay the money back in cash as well, which 16 months, the cash flow is strong enough to actually be able to do that. But we would obviously expect the conversion to Greenstone to take in shares.
Right. So this is it's at their election. If your shares are moving up, or they feel your shares will move up, they will probably elect to take shares. Or they could just treat it as pure debt and you repay that back at the end of the term, which would require you, if you've got cash, it's fine, or perhaps you could refinance if you weren't.
That's correct. That's correct. Exactly that.
Okay.
Yes,
okay.
Exactly that.
So it's an interesting device which some juniors use. Did you look at the option of equity? Because I imagine last year, or towards the end of last year, it was a tricky period for equities, and I think most companies were being asked for 10-15% discounts. I mean, did you have those conversations?
We did. I mean, we last year started. Production wise, we had a terrific year, and as I just said, we generated cash. We generated $6-7 million during the year, which is a great effort. And but we had some sort of a poor share price performance in Q2 when we had two shareholders, one an institution in London and one a private borrower, a lender of some time ago, investor some time ago, both selling their positions, and that really took our share price through an all-time low all-time low for the last 3 or 4 years of 23p. So at that point, equity was absolutely out of the question. Despite that, we did see a price recovery during the year. We had some, I suppose, one thing Serabi, like many junior, has suffered over the years is liquidity. We did actually see a lot of, on this gold run in the second half of 2019, we saw a lot of retail investors coming to the stock, and that really drove the price up. And for once in quite a while, we had some real liquidity. Share price went back up to about sort of, I suppose, in the 70-80p range, which certainly brought the prospect of equity into question. But having investigated it, speaking to our brokers, the board, major shareholders generally, it was still expensive money. I mean, most of the equity deals kicking around were still offering, I mean, sometimes 20% discount to the market. So it was still going to be quite an expensive way of doing this. So Greenstone, they're fairly new investors with us. They've been very supportive. They offered the convertible loan. So it seemed for our existing shareholders, including them, it was definitely a favorable and the cheapest money and the best option to take.
Right. Okay. Well, it's nice to have options on the table, and quite an endorsement by Greenstone. And again, for people who don't know who Greenstone are, they're a very technically, geologically technical team or fund in London. This takes their position up, 37.8% potentially, or something like it.
Yes.
So quite an endorsement from them. You must be pleased to have them on board and supporting you.
Absolutely. No, they take a big role in our company in terms of we have regular technical discussions. They offer a lot of support. They've got a good sort of engine room of sort of people that we can call on as well. When we've looked at other things as well. So it's always very useful. They've also got a huge sort of reach in terms of things that the company could be doing as well. So they're super helpful. So it's good to have a shareholder of that type of caliber in our stock.
Well, smart money with deep pockets, very nice. Okay, so that's the finance side, and as I say, I think perhaps people who are struggling with equity, and from some of the numbers that you've quoted today, that perhaps that was a nice option to have. Probably you've made the right call there, it would seem. Can we talk about what you're actually going to do with the money, though? You've talked in the past about obviously getting Coringa into production. I want to talk about that. I also want to look at what you've been doing at Palito and Sachiko, because you've talked about exploration in the past. So what's happening this year with this new restructured Serabi Gold company?
Yeah, well, we are really, really busy at the moment. We're doing there's a heck of a lot going on. Where do I begin? Right. Okay. The operation itself, I'll just quickly talk about our results of last year. We had a great year. We broke 40,000 ounces for the first time ever, which was a huge, great achievement. We ended the quarter, the Q4, with another 10,000 ounce quarter, which is really pleasing. So that means 5 out of the last 6 quarters have broken 10,000 ounces. So we really are in regime, established at 40,000 ounces, very steady, which is not something you usually see with a small producer. It's very consistent. Grades are very solid. Production throughputs are going well at the mines. That we still remain a plant-constrained operation, which I'll come on to in a moment, which is something we're doing about that. But it was very, very pleasing. And we expect this year, certainly going forward, to be more of the same, with the exception that the good news is, which I've talked to you in the past, we have our ore sorter, which is being commissioned as I speak. And I'm actually going out very quickly next week to site to see this machine working. We're commissioning it right now. We've got the manufacturer, at site. We're calibrating that. Now, the effect of this ore sorter is the most diluted ore that we've got, which is generally the Palito development ore and some of the lower grade stope ore. We can pass this material through this ore sorter, which essentially removes waste, either by optical, by color, or by density. Now we are a plant constrained operation. Our restriction is the milling section, which is around 550 tons per day. So if the grade is sitting normally around 7-8 grams, that means at the end of the day, your maximum output is around 40,000 ounces. The ore sorter is going to sort of screen out some of that waste rock, which is currently entering the process plant, and will actually liberate some space so we can actually add more higher grade ore and get that plant processing the same volume, but at a slightly higher grade. So if the grade can go up from, say, 8 to 10, we can squeeze that plant to get something like 46,000 ounces out of it this year, as opposed to last year. That obviously might not sound a lot, but it's 10-15% more. It goes straight to the bottom line, literally. The additional mining cost is there, but the additional processing cost is not. So it makes a huge amount of sense. It's a way of making our little plant, squeeze our little plant and get some more ounces out of that. So that's going to be a great plus in the actual operations. That's ongoing. At Sao Chico, which is our sort of satellite ore body, we feel that's probably the place where the extra mine production will come from to actually take up the slack I've just talked about, add these extra ounces of higher grade ore. And we're drilling there at the moment and have been drilling for around sort of 2 months now, and that will continue for the next 3 or 4 months. We're doing step out drilling there. It's going very, very well. So we're just literally drilling extensions to the current mine limit. So if you can imagine an ore body, it's open to the east, it's open to the west, and open at depth. At depth, we're doing underground drilling with a contractor, doing deep underground diamond drilling to test the ore body at depth. And we're doing the same on strike from surface with the contractor as well. So that aggressive drill program is going to go on for the rest of the first half until Q2 this year, end of Q2, with a view, hopefully, of doing a new resource update at Sao Chico at the end of Q2, Q3. But most importantly, it's going to allow us to actually run out our mine plan a little bit longer, and that's the key there. We also have a Sao Chico outside the mine limits, but in our exploration license area, some really exciting geophysics anomalies, which we actually discovered back in 2018. We've finally got a drill rig on those as well. So we're actually drilling those at the moment. We're only to our second hole. Those results will be coming out in the next 2 months, 1 to 2 months. The first results in the next month, I would hope. So we're going to see a steady stream of drill results coming, particularly from Sao Chico, the mine itself, the step-out drilling, and drilling OP anomalies during the first sort of half of this year. So all that is being funded out of our cash flow, the cash that we built up last year. We ended the year with $40 million cash in the bank. We're going to pay $6.5 million off to Sprott, as I said earlier on, immediately in the end of next month. And then the rest of the money will be used, along with contributing cash flow as we continue to do that exploration program. And finally, obviously, the real reason we're doing the convertible loan is the work as well at Coringa. We have the mining license now. Coringa, our new asset, which we're going to bring on stream hopefully in the next 18 months. We're making great progress on the permitting. We are very close to getting the first license, the most important license, the most difficult license to get, which is called the preliminary license. That is conditional upon a public hearing, which we're going to have. That date's now been set. It's on the 6th of February. That's when all the stakeholders go to a public meeting, which is in the region. It's important it's in the region because it's in the town where Serabi is already one of the biggest employers, and therefore we're a big fish in a small pond. We've got great sort of local support. One really important note is that on December the 6th, we actually got a sign off from Bunai. That's the indigenous. That's the federal agency for indigenous communities, which these days you can imagine in the Amazon. That is a very important group of people, which you really do need their support. And they actually signed off with full support for the project. That there'll be no negative impact for them, and in fact positive. So that was a tremendous piece of news for us, which means we'll go into that public hearing well placed. All being well, the public hearing will go well, and we'll get the preliminary license on the back of that. That is the hardest license, and that is the license which you're going to get stopped. You'll get stopped on. So we feel pretty confident. We've made the project pretty watertight. We've got no tailings there anymore. We've got all the environmental impact studies, etc. And our plan will be to actually not use tailings and actually dry stack tailings. So again, it's as good as it can be. So we feel very confident on the back of that meeting on February the 6th. We will have positive news. And just to finish on that point, so to back that up, we already do have the license to start the underground mine. So again, we're going to get that underway as soon as possible. And I think it's important to demonstrate that we are, we're a company that's really committed to the project in the region. And again, just getting it started, putting jobs into the local community at the earliest stage, and getting that all important geological information for lenders and equity down the line. However, we finally fund the project finance to build it back in the base what will be 2021. We'll just say advance the project and have more confidence on the asset itself. And one other thing we would like to note is our costs. I mean, we've actually managed around probably about 1050 for the year in 2019 with our production, and Coringa is going to bring in an additional 40,000 ounces, similar cost. But of course, the key thing to remember here is, whilst it won't be direct operational synergies as it's 200 kilometers apart, there will obviously be maintenance synergies, management synergies, some shared facilities like assaying, assaying facilities. We're trying to locate some of those services between Palito and Sao Chico in a city called Novo Progreso, which basically sits equidistant between the two assets, a town of about 40,000 people. So there's a lot of positives there. And that, I think those extra ounces will come in low 900s, which mean overall we'll be an 80,000 ounce producer with around sort of an all-in sustaining cost of about 950 as opposed to 1050 today. So, with today's gold prices and today's exchange rates, that's a pretty nice place to be for a company of our size.
Okay. Well, look, Mike, reason we called you was because you had a great year last year. Let's say share price, trebled. Can't complain. You finished with a lot of cash in the bank. You're restructuring, it seems, your financial position at the moment to kind of give you a good start to the year. I guess what we need to see from you is delivery of all of these things. Getting into production. Doubling your production with the addition of Coringa. So it's a case of delivering, doing what you say this year, isn't it, for you?
It is, but it's not something we haven't done before. I mean, at the end of the day, it's repetition of Palito. So it's not, we're not leaving our comfort zone. We're just doing the same again.
Step and repeat, cookie cutter approach. I love it. Well, look, Mike, thanks for that update. We will stay in touch, and do let us know how you get on with that preliminary permit. As you say, it sounds like a big step for you, and then we'll stay in touch
Yes.
during the course of the year. Appreciate it.
Appreciate it. Thank you very much.